Good morning. It is Monday, March 2nd, 2026. Buckle up because this is going to be a really important market update for the week and your Clubhouse Insider. So just as we were finally finding a level, we have major geopolitical events going on in the world here that are going to affect the markets. Have you been trying to time the markets and recently been deciding not to buy or pull the trigger on a refinance because you think rates should continue to get lower? Well, I highly recommend against that. And here is exactly why. If you've been watching the news or social media, you're often getting information that is behind the curve. And this weekend is going to prove to be another example of that. That information is late, and that can mean all the difference for a better rate and payment. So just following the 10-year Treasury alone or federal funds rate or anything else that the internet might be telling you to do, it's not going to help you predict mortgage rates. There are so many things that can affect the bond markets, which can be extremely temperamental. So today I want to talk about something most headlines miss, which is mortgage rates aren't just driven by economic data alone. Geopolitics can move them just as fast. So over the weekend, major conflict involving Iran and the Middle East, sending shockwaves through the global markets. Oil prices are jumping, volatility is increasing, investors are shifting money into safer assets. Because energy prices affect inflation and inflation drives bond yields, events like this can push mortgage rates higher very quickly. So just last week alone, rates were trending down. They had softer economic data coming in that was helping. After the escalation overseas, though, that improvement has stalled immediately. So things happen so fast. In some cases, they even reverse, which happens overnight or even intraday when the markets are open. Markets price risk instantly, long before the news explains what happens. So let's take a look at this. If you type in mortgage interest rates news today, look at this, 1 day ago, 2 days ago, 8 hours ago. This is a day ago, but it's saying that how much it's dropped. Okay, but everything you're seeing on here is old, at least by a couple days. This one even says 1 month ago. So you cannot trust that information to be in real time. If you take a look at the actual rates, still, it's because it's before most interest rates come out. Today, it's 10 a.m. right now. Most rates won't come out for a little bit yet, and then you'll start to see this average go rising, right? So right now, it's showing 5.99 on a 30-year conventional mortgage as the national average. FHA is coming in a little bit lower, VA a little bit lower, which is great. But look at this, Monday's rate trend is negative, very negative too, all the way here to the right, significantly weaker. So you're going to start seeing these numbers change throughout the day, and lenders are pricing for the worst. And this all happens very quickly, but well after the general consumer and general public actually receives the information. You can see here, these charts are all delayed, even here on Monday morning. We knew from stock futures, different things over the weekend. Obviously, you can guess if you know a little bit about what drives rates, that something like oil concerns is going to do just that. But you'll see we've had really great a trend here, and rates are really coming down. This is just over 1 month from the end of February to the beginning of February, but you're going to see this spike back up a little bit. And so we just have to keep watching, see what's going to happen, see what kind of fallout comes out. But that just leads to an important point. Again, I want to reiterate, headlines, articles, marketing that you see, they're behind what the actual numbers are. So if you call me, you say, hey, I've been following the Treasury, I've been a friend this or a post that, those are going to be late. In some cases, that's okay. If the market is trending downwards, they're late and it might even be better. But in a case like this, all of a sudden, we're going to start to see, even if it's a small spike, it's still a spike. And we need to be aware of that as you get real quotes, because these averages are, again, for the millionth time, these averages include perfect credit, probably big down payments, even buying points. So if you're going just on the averages or trying to interpret the 10-year treasury and you don't even know really what goes into that, it's going to be ridiculously hard to understand why your rate is higher than the number once you actually qualify yourself, apply, show documentation, understand your actual credit score. It's going to be really difficult. So this is why preparation beats trying to time the market 100% of the time. So as buyers are waiting for the perfect rate, ask yourself, do you really want to wait another year, months, weeks? Do you want to wait any kind of period of time for just a small payment increase or a small payment difference while your rent keeps going up, or you keep paying mostly interest with no real long-term strategy? So if you're just in a loan, you have a higher interest on your mortgage that you're trying to refinance, that you're waiting, it's all front loaded. So a lot of that payment that you're making every month is going towards just interest. So we can significantly reduce that, start getting into principal faster. Again, long-term strategy, but we've got to have that right vision and right attitude around it. So timing matters, but hitting the absolute bottom is rare, even for professional investors. Real estate is a long game. You can buy when opportunities exist, like right now, and you can refinance later if rates improve. Start building equity now instead of waiting on the sidelines. I can't emphasize that enough. It's a long-term plan. Start the strategy. So instead of asking yourself, is this the lowest rate ever? Or saying something to yourself like, you know what, I think rates are going to keep coming down more. A better question and a better thought is, does this move me closer to my financial goals? If we wrap our head around that, we're going to get to the finish line that we set for ourselves. And your finish line might be different than someone else's. But does this move me closer to my individual financial goals? That's what I'd like to have people take away from this experience of seeing the market coming down and all of a sudden hitting a little bit of a roadblock. It's going to happen. So if you want real strategies tailored to your solution and not just guesswork, that's exactly what I do to help people every day. For example, over the weekend, we were able to lock in rates for multiple clients, knowing that rates would be higher today and that pricing would be higher, regardless of what you see online. Lenders are going to reprice negatively today. So we knew that, we beat them. That's just one example of how having a true pro and a broker like us with flexibility on your team matters. So just remember, mortgage is not easy. In fact, it is actually very difficult. There's lots of factors. So let us take that stress off your plate, put a strategy in place, and then execute on that strategy and help you reach your financial goals that are long-term, right? Just like a financial advisor is going to talk to you about retirement. We're working on a couple years out with housing and interest rates. And then overall, you'll see that trend. And if you're on that line, you're going to be happy. So that's the market update for today. Please reach out if we can help you. We want to be involved early. We want to help you plan and put a strategy together and take the stress of trying to time markets out of it. Have a great day, everybody.